Market Day Report. Glad you're with us here on a Tuesday. Let's go to the markets. Let's see what's happening in the corn market as we get things rolling this morning. Half penny higher on the December at 429 3/4. March contract is a 1/4 cent higher at 440 a bushel. What about soybeans? Well, our trade is lower now. It was higher earlier in the session, but January now at the bottom, 10.01 1/4. It's down 8 3/4 cents as again we tick down to 10.01 a bushel. Wheat market. We'll start with Chicago. Rally going on in the wheat market in part due to the latest out of Russia. Well, latest out of Ukraine. Ukraine deciding to fire U.S. missiles into Russia. Russia saying, okay, game on. 588.5 on July Chicago. That's up 7 cents. Hard red, July contract, 5 1/4 higher, 587 3/4. Spring wheat, we'll look at the December contract at 587 1/4. It's up 2 1/4. In New York, cotton futures have been lower and remain there at 66.36 on a lightly trading December. March at 68.73. It's 68.72 now, down 30 points. Before we join our guest, let's look at what's happening with the equities. Dow minis are moving lower. NASDAQ is also in lower territory on the front couple of months, and the S&P is lower as well. All right, Chris Swift is with Swift Trading. And Chris, there's a lot that I've thrown out there, but what kind of catches your eye this morning?
You know, Rue, what we're doing now, Tony, is we're getting ready for next year. Everything's wrapping up this year. We've got a lot of our grains already marketed, and we're going to be looking for some interesting aspects in corn for next year. We believe ethanol will continue to be a driving force in the corn market. We still have some weather concerns in South America, but when I look at just the price alone and thinking about the demands that we're going to have, inflation continues to be on the horizon. We want to own call options going out into the July contract. You got just a small premium, nothing like full carry out to the July. So we're able to own pretty close to the money options, giving us some security, but not having to pay a great deal for that security there. Market keeps going lower, that's okay. We may have paid a few pennies more for it because of our option premium. But if we start to see 5 and 550 bushel corn again, we want to make sure that we're still feeding 460, 470 corn.
Right. You mentioned ethanol in there. West Texas Intermediate, let's see if we can bring that one up. It's been higher in morning trade, up 45 on the D's at 69.61. I wanted to bring up crude as well as RBOB or gasoline because that's going to factor into that ethanol equation as well. And then a rally that we've been watching in the nat gas market, up over 26% year to date. Are you watching the outsides?
I am. You know, if you think about what's coming up, the Trump administration is going to be very much trying to lower oil prices, get some inflation under control. And I have no doubts that they will try, but I'm not real sure how good the success will be just right off the bat. We've got wars going on overseas now, some in the Middle East that are pretty hotly contested. We've got issues out there here in the U.S. where we're relatively high production, but at low levels, storage levels. So anything that can take place, we could see energy jump up 10-15% and kind of start to ruin some of our best laid plans. So we've been for the last 2 or 3 weeks, while diesel fuel was low, while crude oil was still under $72 a barrel, now it's 69, trading back up towards 70 again. We want to try to own some of that. Again, similarly to the corn, we don't want to start next year already having to fight input costs. So now, at the end of this year, while things are a little bit less expensive, let's go ahead and own some of those input costs that we're going to have out into the future and make sure that we at least have prices that we are the ones in control of instead of the market.
Good points. Chris Swift with Swift Trading. We'll take a break and come back in a moment. We'll look at livestock futures. Market Day Report continues after this. All right, so we're trading this morning, working our way towards Friday's cattle on feed report. We'll get that after the close on Friday. But today we trade the live cattle market. What's happening? Watching December push a little higher, up 62, 184.72. 27 higher on the February, 186 and a quarter. God knows a little something about those markets coming up in just a moment. November feeders double or $1.55 higher, 253.37. January is now 35 higher at 249.85. And show lists appear to be smaller this week. Asking prices are higher after retreating last week. And the hog trade is, well, we'll say mixed, with December up 12, February off 7, and we're unchanged on the April contract. Chris Swift is with Swift Trading. All right, let's talk livestock now, because, again, I know that's really where your passion is. What are you watching?
It's been a flurry of activity. Last week, we saw some changes in the cash market, a little bit softer in the futures, a little bit softer in the cash market, but yet futures were a little bit firmer. Today, we got a little bit of a negative basis in the February and April contracts to the fats, a good opportunity that we have not had in a long time. The feeder cattle market, probably the most interesting, where we've seen the index move up just slightly, catching a lot of that positive basis kind of by surprise down there on the futures. Futures have run $8, $9, pretty quick fashion to try to shore up the basis. We can see we're right around the 252, 253 area for the index. That's where November goes off the board Thursday, last trading day there. And then we see January pick up at 249, so still just a little bit of discount, but significantly a narrower basis than what we were trading all last week. So opportunities continue to exist in there, and a lot of it has been change of the weather. We've had more moisture out there, the wheat's come about. Now we've got pastures that we want to put cattle into, and it came really kind of a rush, the old Western days of, I got to have cattle to bring in there for the wheat. And then we've seen the farmer feeder come in, bidding a little bit higher for inventory. They have a different pricing metrics when it comes to their feeding cost of gain on there, as well as they don't have the same aspects to go through as what a commercial cattle feeder would do. So they want to go out and buy cattle and feed cheaper corn to it than what somebody else might be able to. I think that's where we're seeing this flurry of activity right here.
All right, so I'm trying to make sure I get this right. We've got the rest of today to trade. Then we have Wednesday, Thursday, Friday, Monday, Tuesday, and part of the day on Wednesday. So we basically have 6 sessions left before Thanksgiving rolls in. But I also have been counting this up. We have 32 days left until winter gets here. No, 32 days till winter arrives. And anyway, I just thought I'd throw that out. I'm not giving you how many days till Christmas.
So what are my shopping days? There's the real question. No, just kidding. Thanks for the update, guys.